G'day lads, welcome to the video on how to balance financial statements. Okay, we're using Gerard's Gangsters as our trial balance. Okay, you can find that and the accounts for that in the link via email or in the description of this video. Okay, so that's what we're going off in terms of when I'm producing these statements. All right, particular focus here on the first half of the video on how to set out the information in columns. For the balancing side of things, skip towards the end of the video. Okay, so we'll start things off. All right, debtors is the first account for $47,000. Okay, debtors is a current asset. $47,000. Debtors is one of those special accounts in the balance sheet that goes into the first column. All right, most of them will start in the second column. Okay, next account, we've got sales. All right, sales is a revenue item. All right, sales is $78,400. So these dots represent my columns. Okay, three columns in the income statement, 4 in the balance sheet. Okay. Next account, creditors, $21,300. That's on the credit side. We know it's a current liability. Creditors, $21,300 into the second column. Next one, purchases. We know that's a COGS account. Okay, cost of buying goods. Purchases is clearly buying goods, okay? $56,000. Next one, bank, okay? Could be either current asset or current liability, depending on the balance of the account, okay? In this case, it's on the debit side, so it's going to be a current asset. So leave a spot here for provision for doubtful debt. Okay, we'll get to that soon. Remember, that's a negative current asset. All right, but we'll do bank now, $4,600. So this is going to go again into the second column. $4,600. Freight out. Okay, that's shipping out of the business. That's going to be a selling expense for $5,500. Freight out. Next one, loan short term. Again, could be current asset, current liability, depending on the debit or credit balance. Most often, and as is the case with this one, we've got a credit side balance for $11,000. It's a short term loan, so it's going to be a current liability. $11,000. Next, we've got advertising for $12,200. Advertising is a selling expense. Whoops. Advertising. Next, we've got mortgage. Okay, so that's a non-current liability, $112,000. All right, next one, office wages. That's going to be an admin expense for $9,000. Again, pay attention to my setting out, okay? Neat and straight in columns. If you're not great at drawing in a straight line, draw the columns in. Drawings is my next one. Owner's equity, we know that's a negative figure, okay? So it's going to be in brackets. Again, into the second column. It's not one of those special accounts that goes in the first column. Interest, okay, for this one, we've got interest on the debit side and we've got it on the credit side, okay? So interest on the debit side It's either going to be an asset or an expense. We know it's not an asset. So 4,700 is interest expense. Okay, interest expense is a finance expense. And that amount was 4,700. And interest on the credit side, well, that could either be, could be an owner's equity account. It's not going to be that. Could be a liability. It's not going to be that. Could be a revenue account, and it's going to be interest received. Okay, so that's an other revenue item. Interest received or interest revenue. Okay, and that amount we've got there is 11,200. All right, next one. We've got capital. We know that's owner's equity. Alrighty, next one. Bad debt. Okay, we know that's a finance expense. Of 1,500. Stock. Okay, that's our next one. Now it says stock 1st of the 7th, 17. Notice the date here. So the stock on the 1st of the 7th, 17, that's a whole year earlier. That's our opening stock. Okay, it's a stock value we had a year earlier, or the business had a year earlier. Stock. Opening stock, 6,500. Next one is commission, okay, on the credit side. So it's going to be a revenue account, okay. Credit balance, it's either going to be a liability, it's not going to be that. Owner's equity, won't be that either. It's going to be a revenue account. All right, so commission for $100. Next one, provision for doubtful debts, okay. So this is the new one we've been learning about, okay. It's a negative current asset, all right. The value we've got is $2,000. So this is one of the special accounts that comes into that first column, and it's a negative current asset, so it's got brackets around it. All right. Oops. So this figure here is going to be the net value meaning the leftover value of our debtors, or the current amount, okay? 47 take 2,000 is 45,000. All right? So this is our net value of debtors, 45,000. Now we're nice and neatly into our second column. So we'll keep going. Rent, okay? Again, this is one with a debit side balance and a credit side balance. So the debit side balance is $50,000. That's the expense. Rent expense, that's an admin expense for 50 grand. And again, there's a credit side balance. There's going to be rent revenue as well. Okay? Rent revenues for $20,000. Running out of room here. Rent revenue, $20,000. Okay. Next one's fixtures and fittings. That's a current asset. Sorry, a non-current asset. Fixtures and fittings. So again, do we have any accumulated depreciation on fixtures and fittings? No. Then it can go straight into the second column. When you've got accumulated depreciation on a non-current asset, it will come into that first one, okay? We'll see that in a second. Electricity expense. It's an admin expense. Electricity, 4,950. 4,950. Office furniture, 46,350. Again, no accumulated depreciation here on this asset, so it goes into the second column. Telephone expense, 5,300. Admin expense. Machinery. Okay, so this one we can see in the trial balance has accumulated depreciation, so we know that's going in the first column of the balance sheet. Machinery. $61, so that was the cost of the asset, $61,000 minus accumulated depreciation. For $21,000. Now, we know accumulated depreciation is a negative non-current asset. Okay, so this value here, which we have for machinery, minus the accumulated depreciation, will be the net value. Okay, so it's clearly going to be $40,000. Two more to go. Rates and taxes, that's an admin expense for $4,950. One more. Insurance, another admin expense, $2,600. Okay, so we've got to, I know there's one more, closing stock. So this will be in the dot points of your additional information. Okay, closing stock. Stocktake was performed, revealing $5,000 of stock on hand. Okay, so the stocktake is performed at the end of the accounting period. All right, so that's going to be the stock level we have on the last day or on this particular day here. Right, so that's our closing stock. A lot of people miss this one. Okay, so it's 5,000. We know it's a negative COGS figure. All right, and it's also a current asset. The second column. All right, so that's everything in terms of the accounts going into the statements. Clearly, we have to balance up here. We'll end up getting a net profit, and that's going to come up here. Okay, because the net profit goes toward the owner. So we're still missing this figure. So when I get to this stage, I like to do my underlines, okay, to tell me where certain things finish. See, I've already started doing it on this side here. So now I've done all my accounts. I've put my underlines in there, ready to go to balance up. All right, so have a look at the next video in terms of how to balance up these accounts. This is the setting out of a trial balance in the two statements. Okay, so have a look at the next video in terms of balancing these numbers up. All right.